get your sniper entries. Those wick entries where, you're, it's almost risk free from the jump.
All right, so whenever I'm trading, right, I utilize the DXY a lot. A very useful role to my trading strategy, meaning I trade GBP USD. So my bad, I was eating something. So
Okay.
with GBP USD, I trade this a lot. So I need the DXY to help me to make my decisions, right? So I don't take a trade on GBP USD unless DXY is in the sweet spot. Sweet spot meaning those daily levels that we know, that we traders can see out of our eyes that the market needs to get to that area. Example of what I'm talking about is this right here, is this area right here. Let's cut it off and let's look. If we know that this is pushing up, the DXY is going up. All of us know it's time to sell GBP USD, right? Cool. If we try to go ahead and sell GBP USD, we're gonna get bite because the market needs to get back down to this area, this exact point right here. It needs to get right here, exactly here, because this is the sweet spot. If you're looking to sell GBP USD, this is a sweet spot you need DXY to get into to capitalize on that move, right? So let's go. If the market continues to move, you realize what happened here on January 24, the market touched that area. Let's go over to here. On January, let's go January 24, right around here. Let's go on the 4 hour so we can see it good. January 24, we touch here. Again, we got the sweet spot right here. So now we're looking for what? The sweet spot for GBP USD. I understand that I'm using this example in a consolidated market, but it's okay. This is the sweet spot for GBP USD also. But if you had went ahead to try to take the sell, say you took the sell on this candle going down, right? This candle, let's go over here, go on the 4 hour, go on the 4 hour, right here. Look at this candle. This candle push right down. Vice versa, this candle did what? Push right back up, right? This candle pushed right back up, and what happened immediately? The next candle was a bullish candle on DXY. The next candle was a bearish candle on this. So the sweet spots are very, very important, right? So now let's put DXY to the test, right? We're going to go ahead and we're going to click this off and we're going to look at the DXY. What happened when the market touched February 2nd? Boom, we had that big push, that bullish strength stepped in on DXY. What happened here? February 2nd, boom, that push, that strength in the US dollar came, boom, and we broke the consolidation area immediately. Once we broke that area, we know how to apply ourselves to a consolidated market. We wait patiently for it to come back on the higher time frame, right back in on the line chart, the sweet spot for it, which is what? Right here. I would say 1.26376 is the sweet spot right here, because I always say to myself that I am not taking a trade unless it comes back in the daily area where we had that reversal point here. So now that we're here, you realize how we got that rejection. So one, you have to wait for DXY to get into its sweet spot, the area, the higher probability reversal point. The next thing, you have to wait for GBP, the currency pair that you're trading, to get into its sweet spot. Its sweet spot is going to come from the daily time frame. I treat it like that. The daily time frame, if I go on the line chart, it's going to give me the higher probability area, because this was the last area that was holding on as support before the market broke it.
Exactly. Yeah.
a lot of us, we do this, right? A lot of us. Let me delete some of these things for a second. A lot of us do this. This is consolidation. We come here, we try to do this. The moment price gets back to here, we start selling. Instant,
Hmm.
instantly. Thinking this would mean something. Well, it means something after the market gets to the main area. So now, again, let's do it for explanation. Getting these sniper entries, and we're trading GBP USD. We're gonna have to apply ourselves to DXY, meaning what? Be patient, sit on our hands, and allow DXY to get back into its sweet spot, meaning into this area, right? Sweet spot, right? Next thing,
Hmm.
once the market gets back in the sweet spot in DXY, we need to get to the sweet spot for GBP USD, which on the daily time frame, it's right here. So let's go here and put this level right here. Boom, that's the sweet spot. The next thing, we have to use our line chart to find those sweet spots. The sweet spots are always going to be on the higher time frames, right? Because as I said, you could have took the trade from anywhere here and go with a larger stop loss and just leave it alone. And it will probably work out for you. But if you want to capitalize more on your account, you can get bigger lots by doing what? Being patient and waiting for the market to get into those sweet spots right there. So that's how I utilize the DXY to get very good entries, my sniper entries, my wick entries on the currency pairs that I'm trading. It's very simple.
I see.
Very,
Okay.
very, very simple. But it's very important to remember to use your daily line chart to get this done. It's very, 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 very important. Because I didn't just wait for the sweet spot for DXY right here, right? I didn't. So let's use this because these are the entries I took recently. So if we look here, this was the sweet spot that we need right now. In a sense, that's the sweet spot that we're working with. I'm not saying that price can't come back down here, but this is a sweet spot that we're working. I probably think the market could try to force itself back down into this daily level. Let me show you into this day level. But the fact that we're sitting on top of this, I would chance this for a second. I would chance it.
Yeah,
But
so that is a question I have. So
yeah,
say for example, starting off next week, right?
yeah.
You know that it's a possibility that it could possibly get down into this area. Are you still trying uh a trade like sell, for example, like on GU, to see if this area right here holds?
All right. With that said, I would still try it because this is still a very good daily level. I would try it. If I
Hmm.
lose, it's fine. And as I said, that's
Hmm.
where risk
Risk
management comes
management.
into play.
Cool.
Comes into play. Because remember, we had the adjustment CPI result. So I'm
Hmm.
expecting the pound to have some sort of strength to start out the week.
Hmm.
Well,
Hmm.
I haven't gone through all my fundamentals yet. I'm going to do it later. But based on the information from Friday, they were
Hmm.
expecting the pound to have some strength with the revised result for CPI, the US CPI, which moved
Hmm.
from 0.3% to 0.2%, right? But as I said, this is the sweet spot that I am currently focused on right now. And as I said on the 4 hour, I waited patiently for price to get into here. If I had forced to take my sell when market was bouncing around here, I would have lost because if I go here, go in here, go here, go here, and look at this, what happened? I would have went through a whole bunch of trash right around this area before the market actually, well, right around this area before the market tried to push down, right? Because if I try to sell GBP USD right around here, right? Which would have been where we had that wick coming down into here. If I had tried to sell it, right? If I had tried to sell it from that area, I would have lost. Or even if I did a loss, I would have used a lot of pips as my stop loss from right here to right here. That's from here to here, it's already 40 pips. And if I have to keep my trade open to afford this to afford all this pullback, I would have to go higher with my stop loss. So now I'm opening myself up to more risk on my account when I could have been patient because this, all of this in the little box, it's basically this. It's basically
Hmm.
this until it got down into here. So when it got down into there, what happened now? Which is the area I actually took the trade from, which is here. What happened next? If I go back and I push everything off, I did all of this, adjusted. Now I'm back there. And another thing I did, as I said, that daily level here, I allowed the market to touch it. As soon as it touched it, I took the trade. And I just leave it alone. I was
So,
lucky.
so
As I was saying, I was lucky enough to grab some pips from this, but it reversed. But I'm still in the trade, you know?
yeah, so you mentioned that you ended up pulling out, right? Did you pull out or are you still in?
Out of UJ, not GBP.
Okay. Yes, because that was gonna be one of my other questions. Like, go down to the 4 hour, for example, on this on GU.
Yep.
So, is there ever a time where like you're watching both the DXY and GU, and you see this push right here happens, like this push right here, right?
Yeah.
Is there ever a time where okay, you see that and you're like, okay, I'm gonna just take profit right there, try to take profit like in this area once you see it pushing up,
I
or
mean,
most times you hold and you kind of trust your trades, like
it's a situation where I'm trying to trust it, because there was so much, bro. If you look at here and we go across, remember, we already know the macroeconomic view. The dollar wants what? For interest rates, inflation, all that to go down.
yeah,
While the UK is trying to hold its interest rates and stuff high. So now we
hmm.
have two things that we're playing around.
They got
One
news
wants
every
to
day this week too.
Right. And the one thing that we're playing around is that one wants to be high, one wants to go low. But at the end of the day, the US is coming out with really good results, like really good results that's helping it have those strength. So that's where consolidation is happening, right?
Hmm.
And that's where the confusion will start. You see, as soon as we get results that will show who has more strength for real, I feel like we're gonna go back to all the trending markets. We're gonna go back to it. We're gonna go
Hmm.
back to it. So me personally, I wouldn't want to close this trade because on the overall 4 hour or daily time frame, we had this consolidation going on, right? And I to me, 1.26300 level or 400 level is the level where I think we have major structure, right? And if
Hmm.
price successfully broke that area and it came back, all I can do is to do what? Map it out. Be very simple with my approach now. And then now I have to go on the DXY to see if the DXY matches what I'm looking to do also. So that's why I
Hmm.
said if on the daily time frame for the DXY, the market decides to come into this area, back down to here, then so be it, bro. I would have to then readjust myself and say, all right, maybe I should have waited for price to get in maybe a little bit higher. So that's why I was saying, like, what if there's maybe like a 61% sitting somewhere right around here that the market could potentially come to here and then drop? That's just what I was saying to myself. Right? That's simply what I was saying. What if we could get this pushed up just a tad more into here, which could potentially give us what? Which could potentially give us what? That move that the DXY needs to come back down to this area. So I'm okay. Go ahead.
I was gonna say go back to GU because what I kind of see is my next question was kind of gonna be about patterns. What I kind of see here is kind of a bit of a head and shoulders. And if it was to go back to that 61, then that would kind of complete sort of a head and shoulders, you know?
Yeah, I don't wanna say it's not a head and shoulders, but I would just keep it as a consolidating area. Price broke out of it. We're getting a clear retest just to make it simple. Not saying that you're wrong about that pattern or anything. I'm just making it simple here. And as you can see, I didn't even use a Fibonacci at all because I treat your Fibonacci's these days as if it's an indicator. You know, I don't really use indicators. But if
Mhm.
I should utilize it now, it's very a high probability that the market could potentially give us this push into 1.26600 level to then give us that drop to give us full that full move back down to 1.2400 area, which is down here. You see what I'm saying? So that's what I'm
Mhm.
saying. If the market, because currently I'm in GU, so if the market pushes now, boom, and keeps going up, well, that's perfect. But if
Mhm.
on the daily, as I said, if on the daily, the market comes here, if on the daily, the market comes down back to here, then maybe down back to here, then maybe I just have to apply myself like that. But I don't know, man. This level just seems like it could work. So I ain't even gonna force myself to see this any differently right now. Maybe it could do a little thing XYZ. So that's why I have my stop loss or price touch. Yeah, that's why I have my stop loss at 39 pips, right above that level. And now I'm
Yeah, in
looking,
case it does do
yeah,
that, yeah.
and now I'm looking at doing this trade. As I said, the only reason why I even have somewhat of a sell bias in this situation after seeing the market was rallying up is just because we're below this level.
Mhm.
It's not just the consolidation for me, it's just that we're below this level here, which was supposed to be our very strong support level. It was supposed to be there, literally right here. So I'm saying that maybe we could get this drop down to here, which is 238 pips. And then after price gets to here, I will then do what? Relax again and wait, because if the market gets to there, more likely it's gonna get to a point for the DXY2. And then we're gonna
Mhm.
probably have another rejection or something. So that's why, well, that's really how I utilize the DXY and patience and risk management and all of those things together to get my sniper entries, bro.
See, and going into next week, because there's two possible areas where it can push off from, where it's at right now with your entry, or it could possibly complete that scenario with the 60% Fibonacci and go up. Either way, with your entry, it shouldn't hit your stop loss. But going into next week, I kind of have to watch the DXY tonight, Sunday, Monday morning, and see where it's going to see if I want to get in right here where you're at, or maybe wait to see if it does push into that 61% area, and then I can look for a sell.
Yeah. Or you could cut your risk and just enter there and see if it works.
Yeah.
Or
When you say cut your risk, you mean what do you
like,
what do you mean by that?
say for instance, you risk $1,000 every time you enter a trade, but you get to a point where there's a potent there's a high probability that the move can work out. It's a high probability the move can work out from there. But you're stuck between those 2 points, you know? But when you look at the DXY, you have to make a very strong decision, meaning, all right, am I at the area in DXY that is the sweet spot to give me that potential move? Or am I not there? In this case, we probably
And you
there.
are, yeah,
So you're still low-key indecisive, but it's
yeah.
at that given sweet spot. So what you could do It's not like, oh, you don't say for instance, you don't want to miss out on the move.
Hmm.
You just lower the risk because remember, you're slightly indecisive. By the end of the day, this game is a probability game, bro.
Hmm.
So you can cut the risk to take the trade because it's still not a bad trade. The only
True.
thing
Okay,
that
I
could
feel that.
the only thing that could mess us up is if fundamentals.
Hmm. True. I feel that. So,
Right.
you do your chart is really, you say you don't do indicators. Your chart is really clear. It's very cut and clean. When you're looking at trades, right? Of course, you're looking at the DXY, see how that's moving and whatnot. But besides that, do you also have like certain chart patterns, candlestick patterns that you rely on, or
I
anything
mean,
that's your favorite?
I trade. I've been trading for, feel like this month makes 4 years completely. I've been trading, right? Because I started trading that same week when we're in GSW, college I went to, and GSW basically shut down for COVID. That same day,
Over
yeah, that
a
same
year's
day,
time.
the same day everyone was that the news came out and then school started closing. That same day, I found out about trading. All right,
Mm,
before I even know that COVID was going to be this crazy thing.
yeah. Hmm.
After 4 years of trading, bro, it's so unavoidable not to see these patterns and
Hmm.
not add them to your arsenal. You know what I mean? Because
Hmm.
a break and retest is one thing, but a consolidating, boom. And then say you have a head and shoulders, boom. The market will present these things to you, bro.
Hmm.
You get what I'm saying? It's gonna present these things to you. You don't have to fight it. You don't have to kill yourself up. The patterns will come to you. A M pattern will come to you. A head and shoulders, a W pattern, a whammy, a
Hmm.
molar candlestick. Um, there's so much, a flag pattern. They will show itself.
Some of those I don't recognize.
Exactly, bro. That's
Never heard of a whammy or something else you said.
that's just a double bottom. You
Oh,
see what I'm
okay.
talking about?
Okay.
That's a double bottom, whatever. What a whammy is basically like this. Like you have structure here, support,
Yeah.
and the market broke the level, boom, and goes up and it comes down. This area here identifies where the whammy starts, meaning boom, boom, boom. So it's a uptrend move, but it's a
Oh.
situation where under here the first touch in that area extends lower than the second touch. So you're still
Hmm.
getting what at the end of the day? Market structure meaning what? Higher low, higher high, higher low, higher high. So that's a whammy. Vice versa, you have a moolah. A moolah. It's the same thing as whammy, but it's in the resistant form. You get what I'm
You know,
saying?
I wonder if I know you were talking about getting that seeing the DXY in like that sweet spot where
Yeah,
it'll like wick off that sweet spot.
yeah,
I wonder if, it works out to where the wick off the sweet spot is what can allow you to get a position down here versus after you do the retest and get it right here. You get what I'm saying?
yeah. Stick a pin on that. Don't leave that. A lot of the times, if you pay attention, we have that. The market tends to do that usually. We have that touch, my bad. We have that touch that takes place here first, and then the market goes up, and then we come back, we retest just the support level on the top of it, and we continue. A lot of the times that happens, bro. But most of the people try to capitalize on this. But if you
More,
understand market,
more for sure.
yeah, because they're treating it as, okay, this is where I know for sure. So it's the same thing on DXY here. Let's go on the 1 hour when market pushed up here on Thursday, Friday. It's the same thing. Once the market pushed up, I think the 4 hour is better. Yeah, once the market touches this area, well, yeah, here. So once the market came down into here, boom, and pushes up, boom. Where did it come back and touch? Right here on the edge, boom,
Exactly.
and
Yeah.
went back up. So at the end of the day, we're still having market structure being presented. Higher low, higher high, higher low, higher high. We still have market structure being presented. So that's why when this was constantly and going crazy, I wasn't killing myself up, bro. I
Yeah.
wasn't, because I still realized that, okay, we still have structure being presented. And I was so simple, nonchalant talking about it while everybody
Mhm.
was saying, yo, this is consolidating XYZ. You got to
Yeah,
learn how to
don't
be,
erase that. Don't erase that. I want to ask you another one. Go ahead.
yeah, you don't have to like try to find the hard stuff out of it. It's very simple, you know?
Facts. No, I see
What were you
that.
saying?
So I was gonna say, so like I've learned different things when it comes to how can I explain it? Like all right, for example, this right here, how it wicks down here, it comes back up, and then but this down here is this is a full candle. It touches right here and then lifts off, right?
Oh,
Now, I've heard, now my question to you is the wick, is the wick as, what's the word, for sure, or is it as much as a of a confirmation as a full candle that touches it and reaches off? If you get what I'm saying? Is the
so
wick as much of a confirmation as the full candle?
that presented
When it,
itself next.
yeah, like
Of course.
when it comes to just like filling out a zone or identifying a zone, is the wick as important or as confirming as the full candle?
All right. My thing is, and it comes down to what you're looking for. So overall, I'm looking for a continuation for the DXY to go up, right? I'm
Mm,
continue. That's what I truly want. That's what I truly want for the DXY to go up. So, of course, when the market comes down to here, I'm going to apply myself on GBP USD based on it coming down here. Instantly, I'm buying. You know how I trade. You know how I trade. If I am looking for something and something presents itself, I'm taking it. I'm not second guessing it. Worse if I have fundamentals to help me. And we've been having fundamentals, bro. We've been having fundamentals for the past couple of weeks for the US dollar being very good. Like it or not, it's been very good. Very
mhm,
good. Even though people are expecting them to be bad, they've been very good for right now. But remember, I mean, but remember, what are we looking for? We're looking for continuation. So if we're looking for continuation and it comes down, it's not that, oh, the wick is super important to me. It's just that the market got into the area I really wanted it to get into.
mhm,
So now I care about it. And as I said, it's all about what you're looking for. Because the person that's looking for, the person that's looking for the market to continue to go down, he's not going to pay attention to this wick at first. He's probably going to pay attention to this. Because he's going to be
mhm,
like, all right, the wick, I'm looking for it to go down. I'm not going to take the trade. Boom, it pushes up. All right, I got to change my analysis probably because now we realize that this wick shows that there's strong bullish sentiment here. So now we're going to push up and we're going to come back. This is now the move that we need to buy at. While
mhm,
in my mind, I didn't have to think about it. I have to say so much sentences. I have to process it so much. Once it got down into here, it just made sense. And I'm pretty sure on a lower time frame, it's not just, let me delete some of these things so we can see it clearly. Um, on a lower time frame, like the 1 hour, it's literally just a bearish candle to a bullish candle.
true,
So,
true.
so the person that's looking for the market to go to the downside, he's going to be waiting patiently to see if we're going to get a break of this level to go down. So at the end of the day, it's what you're looking for. I was looking for a continuation because I how I looked at market structure for the DXY currently, it looks like it was gonna go up higher. But
Hmm.
you know there's people who, when you're looking at something, somebody's doing the opposite of what you're doing, right? So I would say, bro, like I treat those wicks based on how I'm looking at the chart, what I'm looking for. So the reason why I try to use this way of explaining it is just because, like, I don't want you to be stuck saying, okay, these wicks are so important, X, Y, Z. You got to understand why that wick is important to you, personally, to you,
Hmm.
based on what you see. So that's why because I don't want you to be like, I hate when people teach me something or show me something, and I'm now gonna say, all right, that's definitely what it means. You got to learn how to be unique. You got to learn how to be like, like, like flowing with the market. Like you're understanding everything. Like you're not just a robot.
Hmm.
You got to learn how to see, be creative, but have your mind, your eyes open to the scenarios. So when it got down into here, now you can take those positions. But here's the thing now, on the 1 hour, if you know how to trade, people always talk about this. Wherever we have impulse, the market always comes back and retests the edge of that area. And that's what happened. We had that push up to here, boom, boom, boom. Price came back exactly. We went here. So with this candle right here, I'm going to show you that's why I took UJ. Because I took UJ exactly at 146. Yeah, 146,165. It's 165. That's where I took it. 146,165. Right around here. Right around here. 165, 165. So right around there. I took it. And you look, I closed my initial entries where? Here. After price came back down and went back up, I decided to just get out here. Why? Because I understood that the DXY came back down to here because I thought we were gonna have that flush pushing up Thursday, Friday, which would
Hmm.
allow UJ to do what? Continue to go higher. But for argument's sake, I have to treat UJ like this. There's an error here. So this is probably our gap. So you took this trade probably around, you took it here, right?
Oh yeah, I think so. Yeah.
Exactly. You took it there. And that's what I was explaining to you yesterday. You try to take the trade here. I'll take the trade down here. Because in your eyes, and I've heard people talk about this, and people say this to me a lot, that I'm not scared to take the trades in these areas. I'm not scared, but they'll wait for the market to create structure and then apply themselves to structure.
Yeah.
But but
I
but
always
then
wondering how are you able to identify? You can just see it like easily now. How are you able to see that?
And again, I'm going to talk to you about this. The sweet spots on, if I understand what's
Yeah.
going on in the macroeconomic point of view for both markets, if I understand because in this situation, we have to now utilize two things in UJ, the JPY basket. Where was the JPY basket? Right here. This was the JPY basket, bro. This was where
Hmm.
it was when that move happened. That's where it
Yes.
was. So let's go here to February 1st
February 1st.
and let's go to UJ and let's go to UJ February 1st. Let's go to UJ February 1st. Let's go. That's look at the date.
Oh, yeah. It makes it look so simple and easy when you kind of like,
And that's basically what I've been trying to show you, bro. It's utilizing the sweet spots because I'm telling you, predicting, having a prediction of where the market could go is one thing, but when it happens, where am I going to take the trade at? Where should I be patient at? When should I take the trade? How long should I sit on my hands before I take a trade? This is how I apply myself to it, bro. So now, both the JPY basket is in that sweet spot on February 1st. And then um, February 1st, we had, well, February 1st, February 2nd, we had UJ in that same sweet spot too. But remember, from our GBP explanation, we already had the retest in the main sweet spot. So it's the retest on this level now. So I've been eyeballing UJ to take it because I realized what? We were approaching this main area.
Hmm.
This main area here. We were approaching it. All right. So I didn't want to change my overall opinion on UJ. I didn't want to change my overall opinion on UJ at all. And what happened right here? We had price pushing up. So let's where the reversal came around on my birthday, the 6th of February. What happened on this 6th of February? Right here. The same pullback happened. Now we're in that sweet spot again, which is right here. And now DXY did what on my birthday? It came back too. So now we're at that sweet spot again. And that sweet spot again gave us this big push here, which gave you the chance to take this move on UJ. Boom. So you
Hmm.
see what I'm talking about, bro?
Hmm.
So one, in order for everything I just spoke about to work successful for you, what do you realize? We have to understand the overall trend. Everything I just said is not going to work unless you understand the overall trend. Once you know the
Understand the
direction,
overall trend, those sweet spots, being able to identify where the sweet spot is.
yeah, and that's our risk management. And then risk
Hmm.
management steps in right there. When risk
Hmm.
management steps in, you can grow an account really good. Because as I said, bro, this is not always going to be perfect because one person is looking to sell, one person is looking to buy. So somebody
Hmm.
has to lose at a given point. Your goal is to be able to utilize everything I talk about, the sweet spot, risk management, market structure, understanding what's happening on UK, what's happening on that, this and that and that.
Hmm.
And then once the market gets to our sweet spot, you can decide if you want to close or not. Now, if this should go higher, what am I going to do? I'm going to apply myself to it, right? So that's just basically, how I get my sniper entries. And I feel like if you utilize that, bro, you should have a lot of success. All right.
That's a great explanation. Yeah,
Yeah, bro,
for
definitely.
sure.
I feel like this is gonna end